Looking at the 4-hour chart of the US dollar, you might think that we are looking pretty weak right now. And on this time frame, I certainly agree with you, as we have broken the previous 4-hour trend line to the upside, but we also have a 4-hour trend line to the downside as well. But let me give you guys a case for being bullish for two reasons. Reason number one, this green demand zone down below is a weekly area of demand. I've been pointing this weekly demand zone out for so long now, and we have seen 1, 2, 3 reactions off of that demand zone. More importantly, these dotted lines here, this is a monthly demand in control. That is why I think we could see the US dollar push up to above 103 to this weekly area of supply. The other reason we are bullish on the dollar, and I'm not too concerned, is the fact that we have a beautiful daily trend line to the upside. Look how nice this daily trend line is to the upside. And even if we do break this trend line, we have a demand zone sitting down below at 97.88. This demand zone is responsible for removing an opposing daily area of supply and also a daily downward trend line as well. So even if we break this trend line, yes, I will be bearish on the dollar from here to here. But as soon as we contact this daily demand, then swing trading US dollar longs are going to be even higher odds at this point. So we definitely want to be monitoring this daily trend line to the upside to see if it can hold. And if it doesn't hold, we're most likely just going to push down to this daily demand. And since we have a weekly and monthly demand in control, I'm expecting this daily demand zone to actually hold. So that is my case for US dollar bullishness. On the 1-hour chart, we do have a significant 1-hour supply zone above at 99.98. I think we will most likely break the zone if we push up from here, but it doesn't mean we won't get a small move off of the zone. I think we will most likely see a small move off of the zone, but ultimately, I think it will break. So hopefully you guys understand my case for being bullish on the US dollar. Let me know your thoughts in the comments down below. Moving on to the forecast for the Euro US dollar on the weekly chart, we have that weekly demand down below. It is just the inverse of the DXY supply I was talking about on the weekly chart. We have our purple box down below, which is our support area. I would like to see another reaction off of that support zone. I know this is a higher time frame, so just want to show you guys where I think we actually could be headed. Again, I think it is possible we do see some euro strength right now. Why? Well, because we have this daily demand in control. We are reacting very nicely off of this daily area of demand. You can go back and watch my previous forecasts and see that I've had this daily demand zone on my chart this entire time, which, that's a good reason to hit that subscribe button and like this video. If you have not subscribed yet, make sure you hit that subscribe button. I don't do any mid-roll ads on these videos because I know how annoying mid-roll ads are. So if you guys appreciate that, hit that like button and subscribe if you guys are new to the channel. So we have that daily demand in control. We are about to contact this daily downward trend line. We definitely could see a move off of it. But again, if you go back to my DXY analysis, I'm talking about how on the DXY, we have the daily upward trend line and how it possibly could break. The same thing could happen here on the euro. We could break up to the daily supply and then see the bigger move off of that daily supply. So if you are bullish on the euro, that's fine. I'm going to point out a couple setups here because we actually have a few. So with the daily demand in control, profit margin to the upside to daily supply, longs actually right now are pretty decent. And we have a 4-hour demand zone down below. It is a very big zone. It's not my favorite zone ever, that's for sure. But we do have a 4-hour demand zone down below that is confirmation. Why is it confirmation? Because we removed a downward trend line on the 4-hour chart. That trend line was removed. So if we do pull back down to that demand, I think we could see a move off of that zone. And if you're a day trader, you don't want to take an entire 4-hour zone, that's fine. Wait for the demand zone to be contacted, go down to a 15-minute time frame, and from there, we could look for longs on a 15-minute chart as we pull back into that 4-hour area of demand. And profit margin is pretty decent here. So let's just say you take this entire 4-hour zone, you're a swing trader, reasonable. We have profit margin at least to above this liquidity to this opposing 4-hour supply above, which is an over 3-to-1 trade. Let's just say 2.5 to 3-to-1 to be conservative. Because that's where I think we realistically could target from there, especially since we have a daily demand down in control. So if you're bullish on the euro, you want to monitor this 4-hour trend line. As long as that trend line's holding, 15-minute time frame longs are good. Pullbacks down to that 4-hour demand zone could be good as well. And if you're bearish the euro, I'm really not seeing a supply zone set up until above this liquidity at that supply at 116. This supply zone was higher odds back here though if we would have got a pullback sooner. But since daily demand is in control, a pullback to the supply will be lower odds, and I would probably be more aggressive with trade management off of that supply zone. All right, moving on to the forecast for gold. It is falling off of a cliff, which is weird, right? Because the whole Iran-Israel war is going on. Why isn't gold going up, right? That's fundamental analysis. The fundamentals should be strong for gold, right? That's what everybody's saying. That's why fundamental analysis is complete and utter BS. Things are already priced in. I did a whole entire podcast on why fundamental analysis is completely pointless. You guys need to check that out. The Stoic Trading Psychology podcast. Watch that episode. I talk about this exact why this happens when, yes, all the fundamentals are pointing to the upside on gold and everybody's getting screwed buying gold right now, which is, I mean, it's not funny, but it's just funny how everybody thinks you need to use fundamental analysis. You absolutely do not. I think gold could really fall all the way down at 34.47, below 3,500 is certainly possible. We have a nice monthly demand zone down below, and the more people become bullish on gold, retail becomes bullish on gold, we really could see price push down. I know this is a controversial take, but hey, I've been saying this the entire time. On the daily chart, I did not have this daily supply. Full disclosure, I drew this supply zone after it was hit, and the reason I'm drawing it now is because, in my opinion, this is the supply that is finally removing this trend line. It just happens to be tested before. So I'm not trying to say that this supply zone was a trade we caught. It's not. This was a daily demand zone trade we caught. You guys can go back and confirm that in my previous weekly forecast. Feel free to do so. But this is not a zone that we had on our charts. We have just broken below a daily trend line. And the issue with gold is I don't really see anything over here. I don't see any good demand zones that has removed any supply or anything. So I really don't know where gold is going to turn around. The way I would be viewing gold is looking at this 1 hour trend line. So if you're a day trader and you want to trade gold, this is our 1 hour downward trend line that you want to be monitoring for 5-minute time frame shorts. So if you trade the 5-minute chart, this is the 1 hour trend line you want to be looking for shorts off of on a 5-minute time frame. If we remove the 1 hour trend line and there's a 1 hour demand zone, okay, we can take a stab at that demand zone for a potential swing trade long. But we need to wait for this trend line to be removed. We don't want to just be trying to catch a falling knife. We want to see evidence of the trend line be removed. Nice demand zone where we can put a stop loss and get a nice long trade. So that's how I would be framing it on gold on the 1 hour chart. And look at the 4 hour chart here. I mean, we are just falling off of a cliff, which again, it's weird, right? The fundamentals are so bullish on gold. We should be just going to the upside, which is so funny to me. But anyways, it's just falling off of a cliff right now. I really don't even recommend trading this right now. However, the 1 hour trend line is decent. So that would be our guide for day trading short on a 5-minute time frame. And like I said, the weekly trend is up. So I am still bullish on gold. It's just the question is how much are we going to pull back? And I'll be watching the 1 hour trend line to the downside to see if we can create a demand zone for a potential long trade here on gold. On to the forecast for the S&P 500. We are absolutely falling off of a cliff here. Really could see pullbacks all the way down to this weekly demand at 60.50. It's really the only area. I don't see anything here. And this is really the only good base rally with that explosive move away, which is what we are looking for supply and demand trading. So could price turn around here? Absolutely. But I'm just not seeing any evidence or any demand zones that we really could turn around at. So it's pretty bearish right now on the S&P 500. On the 4 hour chart, we have a very clean trend line to the downside. We are removing demand zones. But if you throw a channel tool on this trend line, we are pretty overextended, it looks like to me. We are actually just wicked below the channel. So if you want to day trade short the S&P, that's fine. I personally never short any indexes, but if you want to, I would wait for above that 50% mark towards the trend line. Then we could continue to look for shorts on a 15-minute time frame. But I always recommend if you are going to short these indexes, sure, it looks very bearish right now, but you want to be aggressive with trade management because the idea is that the higher time frames are trending to the upside, so you really just don't want to be looking for any massive trades to the downside. I drew this supply zone on the 1 hour chart earlier. I don't put much weight in the supply zone. I think it's going to break too much of a quick return for me, but we do have a couple decent 1 hour zones above. So if we do really start to push up to there, you could look for shorts at 66.84 or the one above, which is the one I prefer at 67.44. And then if you're bullish, that's fine. We want to be waiting for this trend line to be removed, this supply to be removed. If there's a demand zone there, that would be our trading setup long, but we need to see evidence of a change of direction first. Let's say we push up, we break this supply, break the trend line, but then there's no demand here. That's okay, because if we push up, we remove that supply. Any demand that removes that is going to be a nice trading setup as well, which is why I keep these older zones on my charts. Not only are they good for quick one-to-one trades, but I like to see which zones remove them, which is my chain analysis, which I go over in the membership. But that is what I'd be doing here on the S&P 500. I personally don't day trade, but if I did, I'd be watching this trend line to the downside on the 1 hour and the 4 hour chart on the S&P 500. And I'm failing to see any good demand that could really turn this thing around, except for all the way down to 60.50. I know people think maybe that move's impossible. It really isn't, I promise you guys. So that's where I think we could be headed if we do continue to see some more downward pressure here on the S&P 500. Moving on to the USDJPY, beautiful weekly trend line. We drew this one last week. We finally have broken out of this terrible range we've been in on the weekly chart. Just really nothing going on here that we could really go with. Now we have a beautiful trend line to the upside. We are quite up there. We are sitting at the high, right? So longs might make you feel a little bit nervous. It's pretty understandable. I did think we were going to be pulling back down to this daily demand. As you can see, beautiful move to the downside here, that massive red candle. I thought that was definitely evidence to suggest we would be pulling back down to that daily demand at 156.15. We did not get that because look at that candle to the upside. Very, very bullish day on the US dollar today, especially the USDJPY. So we had this 4 hour supply zone. It was a nice trade. Full disclosure, that was a loss for me. Maybe should have had a wider stop because price could push down lower, but just wanted to be transparent with you guys. That was a trade I was calling out, and it just failed. And I thought that we could see, I wasn't looking for a massive move or anything, but I was looking for a quick trade off of this, and that was a loss. So just wanted to be transparent with you guys here. That was a decent little setup that just happened to fail. And when that did fail, we created a new 4 hour demand zone. Let me just go ahead, draw it for you guys right now. It is a very, very weird looking zone. I don't really want to change the way I draw it here, but I don't trust this zone on its own with just an entry and a stop and take profit. It's not that good. So if you want to trade at this zone, it is pretty big. 15-minute time frame confirmation, day trades in this zone would be completely reasonable, and it'd be reasonable to target the high as well, since we have a weekly and a daily trend to the upside as well. So I think that could be a good day trading long area. Swing trading, not really the best. If you are bearish on the USDJPY, we have that supply zone above at 159.60. But remember, higher time frames are trending up. So this 1 hour supply is a counter trend setup, which is fine. We don't want to we don't want to avoid these setups altogether. But what you want to do here, if you decide to short at the zone, is don't get greedy. Don't target the low here. Like targeting the low with a daily trend is stupid. You want to be looking for aggressive trade management. So if you want to trade at this supply, if you get a move like this out of it, put your stop to break even. Take 80% of the trade off here and then put your stop at break even, and now you've made money and now you're on a free ride, right? Because in case price does really start to tank. We can't really predict that move. It kind of goes against the trend, but it could happen. So hybrid trade management is always pretty good, where move your stop from break from your stop loss to half risk. Just get a move away, move it to break even. We get an even bigger move away, move it up here, and then if we get stopped out, we're stopped out for a profit, whatever. So I think this supply zone could be good for a quick move. Ultimately, I think we will be breaking it, and if we do, any demand zone there would be a great trade to trade with the trend. Alrighty, on to the forecast for the British pound. We have this weekly trend still holding on. Not going to get into detail on how I consider my trend lines breaking, but this is obviously looking pretty weak. The reason it's holding up, in my opinion, is this daily demand. You can go back and watch my previous forecast. I've had this daily demand on my chart since it was created, pretty much when it was removed back here. And that's why I think we are seeing the GBPUSD push to the upside. So with the daily demand in control, typically we are going to look for H1 demand zone confirmation. And we got just that. Look at this. We had a opposing supply removed with this demand. Beautiful move off of that demand zone so far. Classic confirmation trade. H1 demand coming off of overall daily demand. Not surprised to see a move off of this zone. Considering we are kind of bullish on the US dollar, moving your stop to break even off this trade, not a bad idea. With the 1 hour demand in control, you could look for 5-minute time frame longs, but in my opinion, this move has already taken place. So getting in long now, not really the best. You're kind of chasing because the setup was down below. But the good news is we also have a 4-hour demand that is in control as well. You can see we just wicked into our demand zone, drawn perfectly there at 1.32. Kind of a large zone, but with the 4-hour demand in control, this 4-hour demand removed a trend line. We could be looking for 15-minute time frame longs. I think that's better than just looking for the 5-minute because the 4-hour demand's in control. So we definitely could see a move to the upside in the pound here. We're going to have to monitor the DXY as well to see, what's going on. And it can get tricky. Trading can be very, very tricky when you use multiple time frame analysis, but you just have to be calm. Being calm is all part of the trading psychology, and just trying to be reasonable as possible and just think about things in a higher time frame perspective. If you guys need help on trading psychology, check out my podcast. I mentioned it earlier, the Stoic Trading Psychology podcast, available anywhere you get your podcasts. I also have the YouTube channel for it as well. It can definitely help you out with tricky situations like this when you're kind of unsure what to do. You just have to remain stoic and reasonable and just follow your plan. And that's exactly what we did here with this daily demand and control. So that is my analysis on the pound. What do you guys think? Where is this going to be headed? Do you think we will be breaking this daily demand? Do you think we will be breaking this weekly trend line to the upside? Let me know in the comments down below. Moving on to the forecast for the USD CAD, we have a weekly trend line in control here. For some reason, all of my weekly trend lines have been adjusted. I don't know why. I don't know if you guys are dealing with that situation as well. I've noticed it while I've been recording this forecast. But we have a weekly demand in control with a weekly downward trend. So we definitely could see a push towards this trend line. If we break the trend line, we're most likely going to push to the weekly supply at 1.398. So definitely pretty bullish here on the USD CAD. One other reason we are bullish is because we just broke this daily downward trend line. If you notice here, this is the high. I want to see that high removed. Then we will have a daily uptrend, which is obviously an even bigger bullish sign on the USD CAD. So this is what I'm monitoring, that daily high there. I want to see if we can remove that to give us a daily trend. And I'll be honest with you, this is a pretty ugly chart right now. We had a 4-hour trend line. That 4-hour trend line was removed. We have a demand zone down below that's very mediocre. It's definitely not my favorite demand. I don't love this move away candle, but it just qualifies at 1.36. So if we do get a pullback down to that demand, that will be our demand zone for a setup to the long side. I personally think 15-minute time frame confirmation in here would be better because it's really not a great zone. The only thing that's good about it is the fact that we have a weekly demand and daily demand in control on the USD CAD. On the 1-hour chart, we are hesitating at this 1-hour supply. You can go back and again watch my forecast. I've had this supply zone on my chart the entire time, and we got beautiful moves off of this supply multiple times. But clearly, it's holding up price, making the USD CAD pretty weak here. But I just don't love this. Look at this. It's not good at all. But I want to have this supply on my chart because if it does get removed, any 1-hour demand there is going to be a pretty powerful zone. And why is it going to be pretty powerful? Well, not only is it removing supply, it's removing very, very tested supply. We have proven supply here because we've seen price sell off multiple times after contacting 1.373. So any demand that removes that, it's going to be a pretty powerful zone. That's what I'll be waiting for on the USD CAD. Looking at the forecast for the Aussie US dollar on the weekly time frame here, we have a good target to the downside if we do push down on the Aussie down to that weekly demand. I think that's where we could be headed. Not really a ton of evidence to suggest we will be pulling back down to that yet. The evidence I would need for that is very simply put, this daily trend line being removed. If that daily trend line's removed, that's where I think we're going to be headed. I mean, it is a long way down, but this is the trend line that's currently holding up price. We have seen 2 reactions off the trend line. The trend line is drawn from here to here. These are both reactions off of that daily trend line. As we came back in for like the second test in the trend line, we actually created a nice supply zone for a short trade on this 4-hour chart. And we caught that trade as a group on the 4-hour time frame. As you can see on the screen right now, called this one out in the daily market breakdown video, which is a forecast I do for the Dime members every single day. If you want to trade alongside myself and the members, join the Diamond membership, where you will have access to the 38-page supply and demand zone PDF, which will be your complete trading guide, the daily market breakdown videos, which are forecasts that I release every single night for the members to trade alongside myself, step-by-step video lessons A to Z covering everything you need to know on supply and demand trading, the Sunday strategy Zoom session where members submit homework, and it's an interactive 1-hour call where we go over all of your homework and every trading related question, private access to myself inside of our private Discord group where I answer all of your trading related questions, and finally the Sunday live stream forecast where we break down over 30 markets together. And it's not just me. Here are some of the members and some of their trades they've been taking lately, absolutely killing it. And we also have some amazing reviews from some of the past members sharing their experience within the group. So if you're ready to trade alongside myself and the community, join the Diamond membership today. Links in the description down below. So this trade has already played out. If we want to continue to short on the Aussie, I think it's reasonable, but we need to see this low removed, because if we remove that low, we will have a 4-hour trend line, which will be our guide for day trading, a 15-minute time frame for shorts. Very simply put, if you are bullish, if we remove this proven area of supply, any 4-hour demand zone that removes that is going to be a significant area of demand. So that is something you definitely want to keep that zone on your charts on the Aussie. And on the 1-hour chart, I really don't see a whole lot. There is an older 1-hour zone from back here. I like that we have kind of based out before, but it's so old now that if you want to trade at the zone, let me go show you guys the zone again. It is semi-decent, but we really need to see another reaction off of this support area, which will create liquidity, meaning there will be stop losses into our demand zone, and then we would look for longs off of that demand at 0.697. So I would ignore this zone if we just pull back down to it. But if we start to really see bounces off this area, showing us that this is support and there are stop losses below, then I think placing an order at that zone will be good. But I'm not saying we should be targeting the high over here or getting greedy. It's still going to be an aggressive trade management situation due to the fact that the zone is very old. I just want to see liquidity formed before it. So for now, waiting for that demand zone to be hit, see liquidity, or waiting for that trend line to be removed, because the 4-hour supply zone trade has already played out. And again, that was called out beforehand for all of the Diamond members. Alrighty, on the forecast for the USD Swiss, we have this daily supply being respected. We got a deep push into the supply as I predicted. And why did I predict that? It's not a holy grail. It's not a crystal ball. The reason I thought we would be testing the daily supply deeper is because we had the weekly supply sitting right above. And I mean, we have wicked perfectly into that weekly supply at 0.79. Full disclosure, I think this supply will break eventually. How big of a move are we going to see to the downside? I don't know. But we have clearly seen a move off of this supply zone that I've had on my chart for quite a while now, a couple weeks. So that is why we are seeing a move to the downside off of the USD Swiss. Didn't stop us from getting a quick 1-hour demand zone long trade off of that zone. Beautiful zone. Removed a trend line. Basing was decent. Move away was very good. Look at that trade. A little bit of drawdown, but a quick trade off of that zone. We don't trade second tests, by the way. So this was not another setup. The setup was the original touch. And it was a quick, aggressive trade management. Why? Because we have weekly and daily supply and control. We were lucky to even get a small move off of the zone, which is like I try to tell everybody, we can get involved in these lower odds situations. We just have to be aggressive with trade management, which is what we did here to catch that quick trade. Now, we have all of that supply and control. So how do we short? Well, if we remove that demand, any supply there is going to be very significant. So that's what I would be waiting for if you want to short at the weekly and the daily supply. Also, on the 4-hour chart, I have an update to do here because we have removed this trend line with the last close of the 4-hour candle there with this area of supply. So at 0.79, we have our 4-hour supply zone. I would say it's semi-decent. It's really not that amazing. I don't love this wick. I would like to see another push down. Then I think that supply could be good. And what's really good about this supply is the fact that the weekly supply was contacted. So when we look at a weekly chart, we are looking for H4 confirmation. H4 confirmation would be H4 zones being created when a weekly supply is contacted, which we literally just did. So this 4-hour supply is a confirmation trade coming off of the weekly. That's why I think it's reasonable to see a move off of this area of supply. So if you're bearish, that is our 4-hour supply zone for a short trade right now. If you don't feel comfortable with just an entry, stop, and take profit, you could day trade a 15-minute time frame once this supply zone is contacted. Hopefully that's simple enough. I try to keep things very simple on this forecast. Let me know your comments on the USD Swiss down below. Oil, moving on to oil, absolutely crazy chart. I'm not even going to zoom into the weekly. I'm not even going to zoom into the daily because there's almost nothing we can go off of here. It is very, very difficult to read what is happening on crude oil. This 4-hour supply zone, full disclosure, I had this zone drawn like this or somewhere around there where if you zoom in, we didn't get a move off of the zone. I think it was actually closer. It was something like this. It was so close that I came on the daily breakdown video for the members and I adjusted it like this, just not because I'm trying to be, oh, what a trade. I'm not saying that at all. The reason I adjusted it to make that the zone contacted was so that we avoided trading at it again, which sucks because if I actually had it drawn how I originally had it like this, we would have got a nice quick trade off of it, but we didn't. I'm just saying, I'm just trying to be honest here. I did move it so that it was tested so that we didn't trade a second touch. And I mean, that happened, but what can you do? So at this point, I mean, this is a very proven area of supply. So if we remove that supply, any demand there is going to be a pretty nice potential long trading setup. Don't really recommend trading oil. It is a little bit crazy. The situation that's going on right now in the Middle East, not the best time to be trading oil, in my opinion. We actually got a nice long trade off of this demand zone. I drew this demand zone before it took place in the morning, and we got a beautiful pullback to that zone, and we pushed up beautifully off of that area. But ultimately, we ended up removing it. But two amazing moves off of that zone. And now, I mean, look at this chart. This is just terrible. It's atrocious. It's absolutely, I don't even know the right word to use for it. Clearly just going sideways. It's really bad. So I'm not really seeing any trading setups right now on oil unless we remove that 4-hour supply zone that I was referring to earlier. But we're not just going to trade a breakout. We need to get a demand zone formed where we have a clear area for an entry, stop, and take profit. But again, not really recommend trading oil because look at the higher time frames. It's so tricky, so volatile. I personally stay away, but you know, if you absolutely got to get a trade in, I'm not seeing anything right now, but if you remove the supply, hopefully we have a demand zone for a potential long trade. Moving on to the Bitcoin chart, last but not least, reminder, monthly demand is in control on Bitcoin. Do I think we could see an even bigger pullback? Absolutely. But when we have a monthly demand, we could expect price to go up a bit, maybe up to the weekly supply zones, up above. So we are somewhat bullish on Bitcoin. On the daily chart, I'll show you guys, I really don't see a damn thing here as far as where we are at right now. We do have a decent daily supply above at 82,154, so maybe that's where we could be headed for a potential pullback to the downside once we contact that daily supply. We have a couple of trading options right now. If you are a day trader, you want to draw this trend line from here to here. Watch this trend line. As long as this trend line's holding, I think 5-minute time frame shorts are going to be good. If we break the trend line, any demand there could be a nice pullback entry for a potential long trade. Very, very simply put. On the 4-hour chart, we removed this 4-hour trend line with this supply at 72,971. It's a pretty good zone. I like the little hidden candle, basing candle here. A lot of people don't think that that's basing, but it is. And that's our move away. So a pullback up to that supply, I think we could see a move off of it. The issue is we have a monthly demand in control and there's no daily trend. So as far as trading the zone, you can, but I'd be aggressive with trade management, meaning look for a 1-to-1. Don't get greedy. Don't target the low. Don't target all that down below. Look for a 1-to-1. Move your stop to break even as soon as you can. That's how I would be viewing this 4-hour supply. It could be good for a quick trade. If we remove that supply and preferably the high as well, that's going to be a great confirmation coming off of the overall monthly demand. So if you remove that, any 4-hour demand zone there, it's going to be a nice trading setup here on Bitcoin. If you guys want access to my full-length forecast, join the Diamond membership where you will have access to that as well as my daily market forecast, the full course supply and demand PDF, and much, much more. Make sure you guys subscribe so you can catch next week's forecast as well. And I always appreciate a like. Thank you guys, and I'll see you in the next video.